The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Moran with you with the weekly perspective for the week ending 10 July 2026. Well, we have another week, and I'm just going to go through this one hopefully fairly briefly. But if you look at this post that I put up on June 27th, I let it run for a week, and I asked the question, is silver being drained from the COMEX? As you can see, about 62% said yes, and about almost 38% said no. So I went through it on a weekly perspective a couple times, and I decided to write this article, The Silver Paradox, which I put on our free Substack. And I went through the narratives versus the actual facts in the silver market. And obviously, if you haven't read it, you can read it on the link. But some of the key areas here are that if all these bullion banks have so much control, believe me, they do. Why do they lose that control at the end of the delivery month and the COMEX is going to be taken down? It doesn't really make a lot of sense. And in that article, I talked about what's really going on with the COMEX being depleted. Now, I'm going to get to this. It may make sense, it may not. But if you see the amount of total inventory on this bottom graph here in 2024, we were there for the total. That's registered and eligible together, which amounts to that amount. You can see it rose very slightly, but it is going up somewhat to that point. So from that point in 2024 through 2024, 2025, the inventory at that year increased, didn't decrease. And then early in 2025, we had the tariff thing. Some agree, some don't. I do. And a lot of silver, went into the COMEX from London. And then it leveled off. Now, during the process of the tariff situation or whatever, the facts are it moved from London to New York. It became an arbitrage situation, which actually accelerated this move because there was an arb to be made. There was basically free money just for moving metal. Leveled off, and then the same amount basically came back out. A slower rate, but it came back out. So I could call it an anomaly. I don't really know what you want to call it, but if you take this out, in other words, what came in went out, and you just remove that from the picture for now, and you look at what happened from this point to this point, you can see that the inventory dipped down a little bit and then it's up here. So this point, as I'm doing the recording, is higher with more inventory total, registered and eligible, than it was back in a year ago and back a year before that. I'll show you a longer duration because the amount of silver coming out is a fact, but as far as it being drained, I wouldn't. It ebbs and flows. Another part is the registered here, which is the bottom. And you can see from here, the eligible is in red and the registered is in gray. And this scale is very hard to see. But if you look over here in early 2024, we were down to, and I've seen this several times, or a few times really, where we're at about 35 million in the registered, which is very, very low. In fact, for me, looking at it for the last 20 plus years, and not daily, probably monthly at this point, I don't pay as much attention to it as I used to. But regardless, that's very low. Look at it now. It's much higher. So some of the criticism I received was, well, look at how much the registered has come off. Yeah, from here. Depends where you measure it from, really. But if you measure from here and you say, oh my goodness, the silver is being drained. Well, if you take this into account, this is the highest point amount of total silver in the COMEX for years. So instead of being drained, it was like a new high. Now, granted, it only lasted from the early 2025 through about 3/4 of the year. But a fact is a fact. If you really wanted to get technical here, you would say, wow, look at all that silver. Wow, we haven't had that much silver in the COMEX in a long, long time. That would be truthful. That would be a fact. And that would be opposite to the COMEX being drained. And just to belabor the point somewhat, That silver that came out of London is there, and then you can see it went back up. Now, I think you can make a better case that London is being drained. I mean, if you look at the quantity in 2017, 2018 it grew, 2019 it grew even into early 2020, then it dipped, then it came back to about the same place as 2020, as you can see, leveled off. But from 2022 down toward 2023, a lot of silver did leave the LBMA. And then as you can see, it leveled off somewhat, and then it dipped, and now it's back here. So if we count it from 2023, which is the last 3 years or thereabouts, we saw more or less steady ebb and flow, down substantially, back up. And now as I'm doing this in July, we see we're basically at the same level we were for 2023, 2024. And now we're back to the same level. So where did the silver go? It went from London to New York and back to London. By the way, on the shipping back to London, why would you move it from New York back to London? You already put it on a ship or airplanes in some cases. And the reason being the arbitrage went the other way. And these banks are going to take advantage of free money. You know, if it costs them X amount to ship and to make 3X on the shipment, they're going to do it. And they did it. It's that simple. So I'm going to go ahead and finish this up. And I just want to point out again, this is from my friend Nick Laird, Gold Charts RS. And this is a place, it is a subscription service. I think the fees are pretty modest, especially for the amount of data that he has. So I just clicked for the 10 years on the exchange volume in the warehouses. So this is the last 10 years from 2016 through July of 2026. Here's that big move in and out of London, as I just spoke about. But here's the trend over the last decade. So prove to me that the silver COMEX is being drained. It's basically in this situation, where we're looking at an increase. Now, to be super honest or technical, it increased to here, then it decreased to here, and then it had the massive increase I've talked about. I'm taking that out of the equation for the reasons stated earlier, and we come back here. So the trend is that COMEX is not being drained. I mean, we can take this point to here and say, yeah, from mid-2020 to 2024, it drained. Well, yeah, okay. It went from, and this is a very difficult scale, so I'm round numbers 400 million to 300 million, okay? 300 million is where we are about right now, combined, both registered. The eligible is in the green, which is the bulk of it. The darker green is the registered, as you can see. So I just want to finish with that. I don't want to make a federal case out of it, but when someone's have a narrative that is inconsistent with the data, I think it's my duty to point it out to everyone, and you can make up your own damn mind. But the truth is, if you want to look at it, look at what the data shows you, not what someone says. It's a show me, don't tell me situation. I'm showing you, even though I've done it, I'm still getting some non-constructive criticism, but that's attacking the personality, not the principle. The principle's factual. COMEX is not being drained unless you take this part here and say, oh my God, look at it draining. Well, yeah, you can make that argument, but it went right back into London. So if you want to look at it that way, feel free. If you want to be objective, take a look at what I just told you. Make a great weekend. I'll be back with you next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.